I'm Marianne Pilling with SourceLink. Bank marketers often are overwhelmed with challenges, which are in fact opportunities to differentiate your bank or credit union to better meet customer needs. While there are numerous challenges facing bank marketers, the most common ones can be grouped into 4 categories. Managing attrition of current customers and maximizing retention of new-to-bank customers continue to be among the biggest challenges facing the industry. Additionally, the shifting in demographics and new competition that's targeting the growing segment of millennials presents new challenges. The 4th challenge we're going to discuss is customer acquisition. The priority of these challenges may differ by institution, but none should be ignored. Let's briefly review these challenges and the opportunities they present. A typical bank loses 15% of its customers each year. Just to net even, a bank or credit union must increase its customer base by 15%. This means to achieve a growth goal of, say, 5%, actually requires increasing the customer base by 20%. Just as you wouldn't keep filling a bucket without fixing the leaks, as bank marketers, it's critical to manage attrition when developing and implementing any growth strategy. Targeted cross-selling is at the core of any successful strategy to manage attrition. Banks and credit unions have realized the importance of cross-selling for years, but few have a disciplined process to take advantage of cross-selling opportunities that come from customer insight. Leveraging information into customer insight can help build a cross-sell process that is based on customer needs as opposed to offering the flavor of the month, which ends up annoying some of your best customers. I recommend setting retention goals for each profit decile of your customer base, and then develop retention strategies and KPI metrics for each profitability segment. An effective targeted cross-sell strategy must be designed to deepen customer relationships while maximizing the return on marketing investment. Specific objectives should address increasing profitable relationships per household and share of wallet. You also need a plan to increase and activate account balances and account activity. It's critical to target and strategically time relevant offers to customers with the greatest potential, with consistent communications across channels. This requires a holistic approach or omni-channel coordination to manage marketing communications across all channels the customer may use, rather than developing programs for specific channels. How do you determine what products in your suite best fit each customer and when to offer and through what channels? By leveraging the insight you have on each individual customer, by looking at a holistic view of the customer, their banking relationships and behavior. Use trigger marketing to communicate to customers when their needs are highest. With this insight, you are more likely to be proactive in meeting customer needs with the appropriate offer. Product propensity models can be used to identify which products are best suited for each individual. Customized models can be designed to meet specific business objectives such as net lift, customer profitability, activation, and retention. Attrition and suppression models can identify at-risk customers. And contact optimization modeling is beneficial in determining the frequency and cadence of communications to maximize response. The second challenge is new household retention. Research indicates 20 to 45% of new-to-bank checking households leave in the first year of the banking relationship. This range would be dependent upon how aggressive a bank is in their acquisition and onboarding efforts. While maximizing customer retention is a significant revenue opportunity, it protects your acquisition investment, particularly with reduced fee income and narrow interest rate spreads. You need to strive to become a new customer's PFI, or preferred financial institution, in the first 90 or 120 days. Instead of a single welcome letter or a simple 222 onboarding program, try using a robust, coordinated, multi-touch onboarding program that includes a series of well-timed, highly customized, and personalized communications through multiple channels. Then you can roll your onboarding program into your cross-sell program when you have more data and customer insight to project each customer's next most likely products. By communicating with a new customer early and often, you are more likely to enhance and provide a positive customer experience, which will differentiate your institution and build long-lasting loyalty. A successful and comprehensive onboarding program needs to have a strong strategy that uses customer insight to build a series of personalized messages. The success requires leveraging as much customer and relationship data that you can obtain. A poorly structured onboarding program can destroy trust if not done correctly. All channels need to be integrated to focus on the same message and deliver the same customer experience. All communications with the customer must build upon each other, be relevant, and reinforce the customer's decision to open a new account at your institution. To measure the success of an onboarding program, it's typical to include metrics for cross-selling products, particularly sticky products. But the critical metrics need to be defined as retention, engagement, and share of wallet. The metrics should be measured at key intervals at 90 days, 6 months, 9 months, and 1 year. When you consider the cost of acquiring a new customer and the opportunity to expand the customer share of wallet, then it's easy to justify a robust, multi-touch, multi-channel onboarding program. The third challenge is the shift in demographics. Banking has changed so much in the past 50 years, particularly to meet the needs and demands of baby boomers. But more recently, it's the impact of millennials that are challenging the traditional way banks serve its customers. And they are a very different breed of customer. These are kids who have never waited in line at the bank. There will continue to be growth at both ends of the age spectrum. Millennials, as they grow and form their households and move into their high-earning years, while baby boomers are entering retirement years. Marketing to millennials is challenging as their thinking and experiences are radically different from earlier generations. Since millennials are more technology savvy and digitally oriented, we're seeing new players and increased competition from non-banks, internet banks, and digital banks. We can only imagine the impact that Google, Apple, Facebook, and Amazon might have on the traditional financial industry as they continue to appeal to millennials. Marketing to the new generation of retirees, the baby boomers, also has its challenges. The aging boomers don't have the same loyalty as their older predecessors. They're also using smartphones and the internet to research alternatives for their banking needs. But like the older silent generation, they require more high-touch service, so the traditional banking model still applies to some extent. The use of smartphones and tablets is significantly increasing among all age groups. More and more consumers want to be able to research, purchase, and manage their financial services on demand right now, using their devices in virtually any location. Instead of walking into a branch office and sitting down to open an account during banking hours, many customers, particularly millennials, purchase their banking services much like they purchase music, books, and other products, online, 24/7. This offers both challenges and opportunities in meeting the changing needs and offering services and channels that match the way people conduct their banking. With a comprehensive customer analysis of segments, banks can integrate highly personalized offers of one's next most likely product within their mobile banking application. This requires a holistic approach to manage a consistent customer experience and communications across all channels the customer may use. Acquisition is the fourth challenge. Well-planned acquisition programs can boost the competitiveness, growth, and revenue of a financial institution, if done efficiently. But attracting the right customer can be challenging. In today's environment, financial institutions are faced with the challenge of growing net new relationships, not just new accounts. This requires defining acquisition goals in terms of quality versus quantity. The dilemma, however, is that many times the best prospects are also the most vulnerable to attrition. If you spend your resources in attracting rate shoppers, premium offer chasers, and those who are likely to switch, they may be just as likely to leave again when given a better competitive offer elsewhere. Losing newly acquired customers significantly impacts your marketing ROI. Marketing efficiency comes from applying more sophisticated, targeted acquisition methodologies that go beyond shotgun approaches or even simple demographic selections. It requires applying customer insight to understand banking behavior. You can improve your acquisition efficiency by aligning your target to match your products and services and value proposition. It might be appropriate to redefine your target to include desired behavior such as sticky products, fee income, transactions, or potential lifetime value. Models can be used to predict brand preference, product purchasing, innovation adoption, and many other applications. Multivariate testing, such as contact optimization modeling, is an excellent technique to test multiple creative and offers, as well as the cadence and frequency of contacts. The best way to improve your acquisition efficiency is to determine who you want to acquire, Then define the target by behavior, usage, and value, and use modeling techniques to find more people like them. In summary, many of the challenges facing bank marketers today are actually opportunities to differentiate your financial institution to better meet customer needs. By leveraging customer insight, you can focus on key customer segments with innovative products, new technology, and deliver through the appropriate channels. As a result, you will be more likely to be in a position to increase engagement, provide a positive customer experience, and build long-lasting loyalty, all while maximizing your marketing ROI.